What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos, guys. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you up to 12 free stocks valued up to $30,600. So at the end of this video, guys, I want you guys to go down to the description box of the video. Click on that Webull link. Open up your new account today. Go get that free stock. Go get that free money. Will there be another stock market crash? And should you be considering selling before the crash? That's what I want to talk with you guys about today. Disclaimer, guys, this is just my opinion. I'm not your financial advisor, right? So do your own fact checking. I'm just giving you my opinion on what I see that's happening in the market. So when I go back to June of 2022 and the S&P 500 hit its 52-week low of 3,600 points, a lot of folks were saying, that's the bottom. We can't go any lower than that. And one of the reasons I think the S&P hit that 52-week low is based on news from the CPI numbers. See, if you go back to June, we were eagerly anticipating the May 2022 CPI numbers because we wanted to see, as investors, if inflation had peaked and was on its way down. And unfortunately, we didn't get that news. We actually got the news that inflation was still increasing. Matter of fact, inflation at that point in May of 2022 was around 8.6%. And I believe that was the trigger for investors to start a huge sell-off in June. And I think that's the reason why the S&P got to that 52-week low of 3,600 points. Fast forward to July 2022, and the S&P had a bear market rally. I mean, it went from 3,600 points in June all the way over 4,000 points. Matter of fact, when I looked at it prior to making this video, it had gotten all the way up to 4,145 points. Guys, that's a 15% increase, right, in the last month in the S&P 500. So a lot of people saying, well, why is that? Why would, the stock market or the S&P 500, which is a good representation of the broader stock market, why would the stock market rally when we received even higher CPI numbers in July for the month of June 2020? We went from May numbers of 8.6 to June numbers of 9.1. Why in the world would the S&P rally on that information? Investors had already priced in that bad news, that CPI bad news, right? I think it also priced in GDP being negative for the second quarter of 2022 as well. And at some point, these investors who basically sold off a good portion of their positions in June. At the end of the day, they're still in the business of making money, right? So at some point, they got to get back in the market to make money. Since they had already sold off positions in June and they knew we were at a 52-week low, guess what they started doing, in my opinion, in July? Buying back into the market. See, it's that old saying, man, buy low, sell high. And that's exactly what investors are doing, right? Buy low, sell high. So what are we, what should we be doing? Should we be trying to base our financial moves off of what institutional investors are doing? I don't think so. Because you got to understand, guys, these institutional investors, they have, computer algorithms and technology and unlimited resources to be able to research and try and predict what's going to be happening in our stock market. They just have unlimited resources. And we don't. We don't even have anything close to the resources that these institutional investors have. So we got to be careful about trying to follow and mimic institutional investors when it comes to them buying and selling their positions, right? We got to be careful with that. And all I can tell you is, in my opinion, your best course of action is to simply dollar cost average in to the market in good times and in bad times, right? Some months you're going to buy your favorite companies and your favorite ETFs and your favorite cryptos, at a lower price. And then some months you're going to buy them at a little bit higher price. But as you dollar cost average in over 5, 10, 15 years, guys, you're going to have an average cost of that company or that ETF or that crypto. And I think what you want to do is you want to look at the historical track record of the stock market and know over the last 90 years, it's returned on average an 8 to 10% return, right? And that's through all of the downturns, guys, over the last 90 years. On average, that's the rate of return. So that's where you gain your net worth and you gain your wealth, is by longevity, right? Doing something consistent over and over and over for a long period of time. Of course, you got to put it in the right investments. You can't just put it in things that don't have any historical track record of growth. You got to find investments that have a historical track record of growing. That's why the S&P 500 ETF or total stock market ETF, that's why they're so compelling, because they've done all the homework for you, right? Those investments, when you look at them, especially the Vanguard S&P 500 and the Vanguard total stock market ETFs, they have historically done really well, man. So I tell people, don't try to be the expert. Don't try to sit behind your computer or on your phone and try and, outperform the market. Don't try and do that. What you want to do is just get you 2 to 3 good, solid investments. And that's what you want to hang your hat on, right? You want to consistently buy those 2 to 3 investments over a long period of time. And that's how you build your wealth. Now, this current bear market rally, in my opinion, it won't last. And I'll tell you why. I don't think it lasts because I believe until you get inflation down, which is currently right now 9.1%, until you can get GDP moving in a positive direction, right? Right now it's a negative direction because we've had 2 quarters of negative GDP, gross domestic product, right? 2 negative quarters, which technically means we're in a recession, which I already said we were in a recession. And I know a lot of people, including our government, doesn't want to admit that. And I get why they don't want to admit it, right? They know they don't want the whole economy to go into a tailspin. So they gotta give the people some positive news, right? They gotta give the people some hope. So I get what they're doing from a political standpoint and just trying to keep the country intact, and the people who do got money and who can't afford to spend, they got to keep those people spending. It's the people that can't afford to spend money, who are borrowing money and using credit cards and things like that to buy stuff. Those are the people they're trying to rein in. People that already got money and have built their wealth, they want those people to keep spending. Don't get me wrong. They don't want all Americans to stop spending. They just want the ones who can't afford to spend to stop spending. Stay the course. Don't sell your stocks, man, if you don't have to. Don't sell your investments if you don't have to. Stay the course. Continue dollar cost averaging in, and just have a long-term outlook, right? Do that, man, and you're going to build wealth. That's what history tells us. That's not what I'm telling you. I'm just telling you what history says. If you do those fundamentals, you're going to build wealth. Drop me some comments, guys, and let me know what you think about this latest bear market rally. And love to get your opinion on that. If you want up to those 12 free stocks, click on that link down below. Weeble's going to give you up to 12 free stocks when you open up a new Weeble brokerage account. Put at least 1 penny in there. So, guys, go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, never stop believing in yourself, and I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.